Okay, so we're very excited to announce that the Hometown Heroes is back. And a couple things with the Hometown Heroes. It is a program that, because it's come and gone in a couple of different ways, there's a little bit of confusion as to, okay, it's back. What does that mean? Who qualifies? How much money they qualify for? How long is this going to last? So in today's webinar, what we want to do is we want to make sure that we understand who is it for, how much money there is, how does it work, and how we can take advantage of this program if you're either interested in buying with this program or you have clients that want to buy. The other thing that we're going to touch on is we have other programs for people that do not qualify for this particular program that will be great for those people that are almost as good as the Hometown Hero. The truth is, no program is as good as this program. So let's jump in. I'm going to share my screen. Okay, perfect. So Hometown Heroes. The first thing is, it's a first-time home buyer program. Now, what's interesting about this is that unlike other first-time home buyer programs, a first-time home buyer typically is somebody that hasn't had a property in the last 3 years. So somebody that hasn't been on the deed of a property over the past 3 years. But for the Hometown Hero program specifically, it's not just not having been in the deed of a program or in the deed of property for the past 3 years, but it has to do with somebody that hasn't had a primary residence for the past 3 years. Meaning, if you owned a second property or if you own an investment property a couple of years ago, you still qualify for the Hometown Heroes as long as you haven't owned your primary residence for the first year. Somebody said that they can hear an echo. Does everybody hear an echo or just the one person? Okay, we'll continue so far. So first-time home buyer means you haven't owned a primary residence over the past 3 years. So that's who can qualify, or that's what we mean in the Hometown Hero as a first-time home buyer. Now, what is it? It's a 30-year fixed rate mortgage. So this is not going to be a 15-year or anything that's adjustable. 5% of the loan amount is going to be lent to you as a down payment with a 0% interest. Now, it's a minimum assistance of $10,000. So even if the 5% will be less than $10,000, you still get $10,000. And it's a maximum assistance of $35,000 in this case. So you can get up to $35,000 at a 0% interest. Now, that's what we call in the business basically free money. It's not free money in the sense that it's going to be forgiven, but it's at a 0% interest. Why is that important, Scott?
The reason why that's important is because where the heck could you borrow money at 0% interest? So being able to do that, there's a lot of programs out there, and this is one of the kind of gotchas with down payment assistance. There's a lot of programs out there where the money's forgiven. Here's the thing you got to think about. We all learn, like, if something sounds too good to be true, it is. And that's the case. So what these programs do, the ones that forgive the down payment, is they'll charge you a higher interest rate on the main mortgage. So you think you're getting your 3.5% or 5% money to you for free, but in actuality, you're actually paying a lot more than that. So here they got to pay the money back, but they're paying it back at 0% interest, which is definitely a better option than the alternative.
Okay. The other thing is the assistance is a 0% interest, like I said, with a deferred second mortgage. A deferred second mortgage means that you don't have to make payments on the second mortgage. Now, you do have to pay it back at some point, but you don't have to make payments, which is good because we don't have to count it against your debt to income ratio at the time of qualifying. So no monthly payments, and it's only repaid when it's sold, when the house is sold, when it's refinanced, when it's transferred, which is basically sold, meaning, let's say that you don't want to sell it, but you want to give it to your kids or give it to your parents. That's called, a transfer. So that's basically when we're going to say, okay, you need to pay back that down payment. When the house is paid off, so basically when you're going to pay the whole amount, you also have to pay that second loan. And then when it's no longer your primary residence. So this is important, guys. When do you need to pay this loan back? When you sell the house, you have to pay these $35,000 or $10,000, anywhere in between. When you refinance the house, when you transfer the ownership of that mortgage, which is basically, of that house, which is basically like selling the house, when you pay it off, or when you move out of that house and make it a vacation home or an investment property. This is important because you need to plan ahead thinking about this, right? If this is your primary residence right now, and then later on in the future, you want to make it an investment property, you want to make it a vacation home, that's absolutely fine. Take advantage of this program because, like we're going to see, it has lower interest. It also has lower closing costs. It's a 0% interest on the second loan. But even though you don't have to make payments on the second loan, if you are thinking about making that property your investment property later on, you are allowed to make payments so that you can start paying off that second mortgage. So very important, you can use it that way. As long as you plan ahead, we can help you, give you an idea of how you can make this, or what are the payments that you can make so that you can pay it off by the time that you turn it into an investment property.
How are they going to know that it's been turned into an investment property?
Well, mainly because if you're going to turn that property and change your primary residence, you should change your homestead because of tax reasons. Now, homestead is something that in Florida allows you to pay less taxes. So as soon as that gets triggered, we're going to be asking questions on, hey, why this is not your homestead anymore? Happy with that answer?
It's a good answer.
Okay,
it's a good answer.
Great. Thank you. The loan is not a forgivable loan. Again, like Scott was saying, a lot of these down payment assistance programs, we give other ones that are forgivable loans. However, at the end of the day, when we look at actual cost analysis, even though this one is not forgivable because it's a 0% rate, it's a much better program than the ones that are forgivable. Okay, so who qualifies for this program? People that are buying a primary residence in Florida, meaning this is not a vacation home, this is not an investment property, this is the home where you're going to actually go to sleep every single night, or at least 5 weeks out of the 5 days out of the week. You need to be a first-time home buyer. Now, we already went over what a first-time home buyer is. A first-time home buyer for this program is somebody that hasn't lived there for the last 3 years. Now, veterans and people purchasing this property in certain areas don't have to show as a first-time home buyer. So if you're a veteran, you do not have to be a first-time home buyer. You can still take advantage of this program, even with the VA loan. Now, why would you do this with a VA loan? Why would you take a second mortgage even though a VA loan allows you to do a 0% down payment, Scott?
So the closing costs and the prepaid items. Look, what's pretty commonly done when a veteran comes to us and says, look, I want to buy this house with no money out of pocket. Well, the 100% financing for the purchase price, that's easy. The loan program, VA loan program allows for that. But besides that, we have the closing costs and prepaids. And what ends up happening in many cases is they end up paying a slightly higher price for the home, asking the seller to pay buyers' closing costs and prepaid items. The thing about that, I don't want to say the challenge, but the thing about that is they're now basically financing that in at whatever 6 or 7% rate, or whatever rate they have for the rest of it, 6, 7. Whereas if you could use the Hometown Heroes program for the closing costs and the prepaid items, they get to pay the interest on the lower amount, utilize this program to offset the closing costs and prepaids with 0% interest, and boom, that's the best of both worlds.
You did a good job explaining that. Okay, another thing is you have to work full-time in the state of Florida. Now, this is interesting because this has changed a little bit. So you have to work full-time for an eligible employer in Florida, and you need to make sure that they have a basically like some type of physical location in Florida. And this is something that's important because if somebody works remote, but they just happen to be able to work in Florida, this program would not work for them. Okay, it needs to be an employer that has a physical location in Florida. Now, if it's something that's a large corporation and they just happen to have a branch in Florida, that works. But we need to make sure that we can tie you or your client specifically to that location. So it's very important. That's something that we need to make sure that it works. The other thing is a full-time employer. It's somebody that works at least 32 hours as far as the Hometown Hero is concerned. 32 or 35 hours, between 32 and 35 hours is what the Hometown Hero requires. Okay. So fully remote employees are not eligible if they're not tied to a location. And they need to also meet the program's county income and loan limits and have at least a 640 credit score. So 640 credit score is the minimum credit score for the down payment assistance program for the Hometown Heroes. 660, we're going to do manual underwritings. Don't worry about that. Just 640 credit score is the minimum credit score. And you need to make sure that you don't make more than whatever the county says that you can make. This is going to be specific from county to county. Okay, this is an example. Let's say that we want to buy a house for $726,000. If you want to buy a house for $726,000, the maximum loan amount is going to be $704,000, $704,222, which means that if we apply the Heroes program, this Heroes program can give you a $35,000 down payment assistance program. In this case, if you use $21,780 out of those $35,000 for the down payment, which is that 3%, because in a conventional loan, you can put as little as a 3% down payment. That means that you have $13,220 to pay for closing costs in this case. And $13,220 should cover, if not everything, the majority of closing costs, specifically for the down payment for the Hometown Heroes, because the Hometown Heroes has something special, which is that they do not allow the lenders or the government in this case to charge for certain closing costs. In this case, it doesn't allow the government to charge for that deed stamps on the mortgage.
Dude, what you talk about is doc stamps on the mortgage. The deed stamps are paid by the seller. So look, the doc stamps on the mortgage and the intangible tax, is it the intangible tax too, or just doc stamps on the mortgage? I think it's just
doc stamps on the mortgage, yeah.
So doc stamps on the mortgage is the loan amount times but basically by 0.35%. So if you're looking at a $700,000 mortgage, this is a savings of close to $2,200 in closing costs. That would be there on any other deal, but because you're getting this financing program, it just goes away.
So not only you're saving money on the down payment, but you're also saving money on the closing costs. This is why, guys, if you think about it, even people that don't need this down payment assistance program, they should use it. They're getting a 0% interest on the money that they're being lent. So instead of, taking their money from their savings account, even if they're making 1% of their savings accounts, that's still 1% more than what the bank is charging them for this money. And in addition to that, they're saving some money on the closing costs. What are you doing, Scott?
My wife has always told me that if I brought my dog Bear into our marketing, we would do better. I don't know if it's true or not, but I thought he should make a cameo to see if that's true.
Cameo with Bear.
Everybody say hi to Bear.
All right, get Bear out of the picture. All right, so again, it's going to save you money on the closing costs. So now you have the excess money, you can use it for the closing costs, and in many, many times, is going to be able to cover the full closing costs, even on a property that's expensive like this. Okay, what are the income limits and the loan limits on this? They change every year, so these are the new ones. So we have, in this case, for Collier County, the income limit is gonna be $181,500. And for Lee County, it's gonna be $168,600. Charlotte County, you have $148,000. Now, we can combine this and we can do an FHA or a conventional loan or VA loan. And the limit on the loan for the FHA loan is going to change by county. It's going to be $764, $750 for Collier and $541, $287 for Lee and Charlotte. And the VA loan and the conventional limit is going to be $832,750 across the board.
And this is significant because a lot of the down payment assistance programs have income limits that are so low, they're actually unrealistic. So the fact that you have these kind of income limits, which more accurately represents a lot of the people we speak to, really goes a long way. Some of these programs, the income's so low, the income limit, that you can't actually afford to buy a house in a market anymore. So it's really nice that they have realistic figures.
Yeah, the other thing with the loan limit, guys, these are loan limits, not the purchase price. So, you can have a, $560,000 purchase price in Lee County, as long as the loan amount doesn't exceed the 541, we're good to go. Okay. What properties are eligible? All kinds of properties. You can buy a single family home with this. You can buy a duplex or even a fourplex with this. You can buy a condo, or you can even buy a manufactured home with these programs. Again, as Scott was saying, a lot of other down payment assistance programs, they're very limited to what kind of property you can do. A lot of down payment assistance programs only allow you to combine the down payment assistance with an FHA loan, which basically says that you can only get a single family home or maximum, at most, a duplex. This program allows you to even get a condo with this down payment assistance program. So it's very special. Okay, what if your buyer doesn't qualify for this program? We have a couple of programs that will help them qualify. We have some doctor loans that give you 100% financing up to $1 million. I wish $100 million. At 10% finance or 90% financing up to $2 million. And it also helps with single family homes, condos, and even duplexes. And those programs will have no MIs. These are programs for people that maybe they make too much money, like doctors, to qualify for the Hometown Heroes. And for those of you that aren't, in the healthcare system, or you are not in education, or you're not a first responder, or you're not in the list of occupations that qualify you for the down payment assistance program, Hometown Heroes, we do have other down payment assistance programs that are, not as good as the Hometown Heroes, because the Hometown Heroes also lowers your closing costs, but they're good where they also give you a 3.5% or a 5% down payment, in some cases forgivable, and you can still qualify with a 620 credit score instead of a 640 credit score. The point is, if you're looking at this and you go, yeah, but I'm not part of that 200 occupations, so I cannot qualify for this program, there's other programs for you.
I think what myself and the audience would like to know right now, Ed, is we'd like you to recite all 200 occupations that are allowed. So please,
I'll send the link. I'll put the link in the description. Look, guys, I was talking to a client this morning, and the beauty with this program is it's a true government program where the government came together, the state of Florida, honestly, came together and said, look, we're going to put together the best program out there for people that can qualify otherwise, but have issues with putting the money down. And they did. Like, there's a lot of these programs that, like Scott was saying, are unrealistic. This one is actually really good because it lowers everything. The interest rate is set no matter what the credit score of the person is. You can have a 640 credit score, which is the minimum, or an 840 credit score, and you're going to have an extremely good interest rate with no points. It also regulates how much money the lenders can charge you. So us as lenders, there's a specific amount of fees that we can charge you. We cannot charge you a penny more or a penny less. So it's going to be the same amount no matter where you go. And like I said, the money that the government charges, which in the state of Florida is higher than other states because there's no income tax, to get a loan, it's actually lower. The point I'm trying to make with this is it's the best program out there. If you're going to a bank, if you're going to a lender that's discouraging you from getting into this program, or is not giving you a real reason why you don't qualify for this program, beware of that. A lot of lenders are not providing this program, not because it's not the best program for their clients, but because they can't charge the money that they normally charge. They make less money. So the banks have decided not to provide this program. A lot of brokers, a lot of different lenders have done that. So make sure that you understand, if you're looking at this, if you're a realtor looking at this and you think that your clients may qualify for this, and your lender or the bank that they go to told them no, make sure that you understand why. Because in many instances, it's not that they don't qualify, it's just that that specific lender doesn't want to provide that program because they, quite frankly, don't make a lot of money.
And I mean, and we worked for a place like that for a lot of years. And look, I want to have a uncomfortable conversation, or bring up an uncomfortable topic of this, which is, I hate when I'm in situations where I'm trying to give honest advice to people, but my inner voice is telling me that I'm coming off salesy or pushy or that type of thing. So I want to kind of say that out there, because this is one of those instances. The reality is this: the money runs out. Okay, they make the money available in tranches. As loans come together, as you get accepted purchases, we can kind of reserve that money. But when the money's gone, the money's gone. So at the risk of sounding pushy or salesy or anything like that, I just want to be very genuine with you. You need to move quickly or the money's going to be gone.
Yeah.
And there's times you make phone calls to people about doing a refinance, and they're like, well, give me a week to think about it. They call back a week later, and we're like, yes, sorry, that opportunity's gone. Like, the rates have gone up again. So this is one of those situations where, while it's available, you have to move quickly. You have to grab it. If not, you're going to have to wait for whenever and if ever the money is replenished. And then if it's replenished, you're going to be in the same situation where you got to move quickly. So if you are on the cusp of buying, or you have clients that are on the cusp, if you're a real estate professional, please share this video with them. and let's work together to try to utilize as much of this money for our clients and our circle as humanly possible.
Yeah, just for for what it's worth, we're 10 days in and $5 million have gone already. So we don't expect the money to last. We still have $45 million left of us today, which is July 20th. So again, if you have a client, or you yourself are looking at this and going, I think that this can help me, jump on the opportunity. This is a better rate than other programs. This is better closing costs. Obviously, the down payment is fantastic. So just take advantage of this. All right, that's the down payment assistant, like promised, in 25 minutes. The Hometown Heroes. If you have any questions, please put it in the chat. We're going to stay for another 2-3 minutes answering questions. And if nobody asks any questions, then you can reach out to us afterwards.
Maybe drop contact information in the chat.
Yeah.
Put your phone number in there. Yeah, anybody has any questions about this, give Eduardo a call.
So we have a question here.
He's the team expert on this for sure.
We have a question here. Are there any programs that you recommend for self-employed first-time home buyers? So all of these programs were for self-employed people. This is not, so this is the thing. These programs work if you're self-employed. Now, the main obstacle when you're a self-employed borrower, it's not, the main obstacle is just showing the income in the tax returns, right? Typically for any of these programs, conventional FHA, we need to look at the last 2 years of tax returns. And based on the last 2 years of tax returns, we're going to check what your income is. So unfortunately today, all of these down payment assistance programs look at the last 2 years of tax returns. Having said that, if your problem is not the down payment, but the income, there are other programs, whether you're a first-time home buyer or not, that as long as you can put a 10% down payment, we can look at different ways to calculate your income. Things like bank statement loans, where we look at the last 12 months of bank statements and we look at the deposits in those down payment, in those bank statements, and that's how we calculate income. Or something like a 1099 loan, where we can look at the 1099 and that's how we calculate income. Or even just a profit and loss statement from a CPA or somebody that does your taxes. We can look at the profit and loss and that's how we calculate income. So there's other ways to calculate income to get you there, but those programs are typically not combined with down payment assistance. Having said that, if you're a medical professional, you're a nurse anesthetist, you're a chiropractor, you're a doctor, there are ways for us to use your 1099 income even if you don't have your 2 years of tax return. So it's a long way to say, yes, there are those programs, but unless you qualify as a medical professional, a doctor, a chiropractor, anything like that, veterinarian, anything like that, you won't be able to do that and combine it with a 0% down payment.
And look, I think it's worth mentioning on the doctors program that it's not just doctors and nurse anesthetists and stuff. There's actually a very long list of lots of types of nurses and other types of doctors. So if you work in the medical profession at all and you're looking for 100% financing, give us a call. We will see where you're at compared to what is available. I speak to people all of the time that are surprised that they're eligible for the 100% doctor program, based on where they are in the medical field.
And we're currently working on having that program also available for lawyers. So we'll obviously put a bunch of posts and a bunch of emails out there as soon as we have that, but we should have 100% financing available for lawyers as well. Is it possible to get a copy of the information you displayed during the presentation? Yes, we will send you a copy. Just send us an email. I'm gonna put my email in the chat as well. Okay. Thank you very much for joining. That was 30 minutes. I hope you enjoy.
I was the better part of that. I was clearly the better part of that.
There was the better part of that. If you have any questions or any comments, concerns, or if you want to just make sure that you or your clients qualify for this, just send me an email, send me a text, send me a call, or you can always find Scott and we'll be able to help.
All right.
Take care,
guys.